Welcome back, folks. Let's have a talk about what's next for gold. You're looking at a 15-minute chart, and I want you to notice how we are coming down. This is a crawl down, right? Look at the up, down, up, down, up, down. Very, very messy chart, okay? Now, I have journaled my trade for yesterday after taking out the low of the day, okay, into the volume imbalance. So volume imbalance was the key reason for looking for longs, even though they were just scalp longs, okay? So order block was generated here and pushed back into order block into the volume imbalance was my entry. And as I said on the video, that's what I'll be looking for. Okay, looking for longs somewhere in London and then targeting these equal highs, which is exactly what we got. Okay, so that was that trade that I've already journaled it this morning. There it is there. It's all marked up, so have a look at that. Okay, now there was a short setup. Okay, so New York Open had this dump. Okay, and that dump, there's a difference between a liquidity sweep and an actual closure below a low. Okay, so if you look at this particular move here, this is the low of the day yesterday on Wednesday. We don't close below that low. We just wick into it and immediately reject. Okay, change of state in delivery right there at that point. Okay, coming back into the order block, and then that's the long. Now we've got, and obviously we've taken liquidity coming to a fair value gap, and now at the start of New York, we completely engulf this candle. Okay, and we've now come down quite significantly in that first hour of New York and closed below the current low of the day. Okay, now I have mentioned this setup previously. This is displacement. Okay, this is the move down with displacement. It's leaving gaps on the way down. These are now your bearish order blocks. Okay, and this swing low. Okay, this down candle becomes your bearish breaker. Okay, so this is a perfect bearish setup, and this move back up is into the bearish breaker. Notice how the body of these candles doesn't go above the bearish breaker, but we do tap into this fair value gap and this bearish order block. Okay, this bearish order block is validated once you get a closure, a down candle closure below the low of those up candles. It could be 2 up candles, it could be 3 up candles. Okay, the ones we had last Wednesday, go back and look at the video, there was 3 up candles on an hourly chart, very strong pattern. Okay, so this is a bearish setup, and look at the time, 9:15. Okay, which is at 9:15 this candle closes at 9:30. And you can see that has made the high. Okay, so 9:30, as I said, 9:30 a.m. New York time to 10 a.m. New York time typically makes the highs. Sometimes the high will be made at the end of that 10 a.m. Candle up until 11 a.m. But typically it's 9:30 a.m. to 10 a.m. And so you've got to look at it and see what signature are you getting in line with the bias at that point in time. At that point in time, the bias is bearish. Okay, we've got bearish order blocks, nice displacement with plenty of gaps, close below the daily low. Okay, and coming into these bearish order blocks, and the key one here is the bearish breaker, this down candle in this swing low that created the high. Okay, now I didn't take that short, even though that's a beautiful setup, because I don't short into the low of the week. We're at the lows here, right? When you look at the entire weekly range, this is the low end of the weekly range. Okay, so I don't short, even though I got a nice setup. I'll ignore those bearish signatures. I don't short into the low of the week, just like I don't long into the high of the week. Okay, so I will ignore. I don't care, and I know that we might be going down to a big target down here that we've already got. I still wouldn't take that trade, and I don't take those trades. So I will give up this bearish entry at the right time with the right setup, even knowing that we might get a nice 300 pip move down to our target. Okay, I will ignore that because that's not my trading plan. And look at the move down. Look at how it's just crawling down. It's just crawling down. To me, it's clearly just reaching for something. Okay, and most likely that something is going to be that level there that we've already discussed. Okay, let's talk about and look at a high time frame. Okay, so if I jump to a weekly chart, okay, let's bring all these down. Let's get rid of all these lines that we have. We'll talk about some of that in a moment. Okay, so here is a weekly chart. Now you can see that that's the gap there, okay, that we're talking about. That's that. Even on the daily chart, you can see that's that 2350. So there's clear liquidity below that, which the market is reaching for, and there's a fair value gap. Okay, so if I turn this back on now, that 2344 target is within there, and I do believe that we will reach down into there. Okay, and if we look at a daily chart, that is also where currently liquidity resides. So we've got this thing low here and this fair value gap. I do believe that this will be taken. I do believe that we'll come into this fair value gap. Doesn't have to close the fair value gap. Okay, just like on the weekly as well. We don't have to close the weekly fair value gap, but I do believe we will tap into there. And the current projection, and I've shown you how I have calculated this, is that 2344. We'll just round this up to 50, 2344.50, or just 2345. Okay, but on the weekly chart and the daily chart, I'm expecting that low to be taken. Okay, now the question is when. When might we see that? Right now, I see that this move down is a crawl. This here, we've come into a 4-hourly rejection block. I love 4-hourly rejection blocks, okay? So that's the 4-hourly rejection block. You can see that entire move, throughout that entire move up that we've had, that I've been longing with you in this entire month of July. I've just been long. That wick there has not been traded down to, except for now. And that's why we're getting a nice reaction from that. You can see that we're respecting the midpoint of that 4-hourly rejection block. Okay, so I will be looking for scalp long trades again today. Okay, I'm looking for this to get hit today, 2383. Okay, but eventually I do think that we will come back through this. Okay, through this. This is now relative equal lows. A lot of liquidity resides under this, right? This is the daily, weekly lows that I've shown you, just above this target of 2344.37, and we probably will come into this gap, maybe even close it. Okay, I don't know if that's going to close that daily and weekly gap that we've seen. Okay, maybe it will. So for now, I think we will get a bit of a long. Today could be just a bullish day up to this 2380. So that's what I'm going to be targeting on the lower time frame, 15-minute chart. Okay, this down candle is our current order block. That's the down candle taking all this liquidity, and I believe Asia will trade into that. Okay, and trade higher, right? So I think so. It all depends what happens in Asia. Okay, so I want to see Asia, move up a little bit, trade into there. I don't think it's going to go back to these lows. May tap into these wicks. I don't think so. I think it'll just come into this gap, which is basically into this order block, and then I'm expecting a move up to take out these highs up above 2383. That's kind of what I'm expecting today. Okay, I'm expecting this. Whatever we do today, I would think today's low, which is Friday's low, I think will remain intact, and maybe Monday will take out what will be Friday's lows, which is come through these lows here, and then Monday I would think takes out this 2344.37. Okay, now I do believe that we are going to go back up, and number one, take out 2400. Okay, I do believe we'll get back up there because we do have a volume imbalance up there that I've spoken about yesterday. Let's see if I've got that on Twitter. I think I did post it. Let's see. Yes, so this volume imbalance is at 2400. Okay. So we're down here somewhere at the moment, and so I think we will get that 2400. I think, yes, that will be hit, and I do believe we'll come all the way back up here as well, and then close this fair value gap up at 2440. Okay, maybe even as far as 2450, which closes this gap. This is back all on the daily chart. Okay, but I think before we get up there, I think this liquidity that resides under here needs to be taken. We don't need a body closure. We don't need the day to close below there. We could, for example, on Monday or today, it could even happen today, Friday. We might wick down there and reverse. I don't think so. I think today will be a bullish day. I think these lows will remain, and Monday will be the reversal. The move back down there, take out what is currently the low of the week. Okay, and then move higher. So that's what I am thinking on a weekly chart. That's that level there. So I do think that we move down. Let me just take off all these lines. So as I said, I'm expecting us to take this liquidity, come into this fair value gap, but I think then we will go back up and take out these highs. Okay, my ultimate target on gold is 2500, and that still has not been hit. Of course, that may not be hit, but I think at a minimum, we need to come into this level, 2447, which is the midpoint of this massive wick on this weekly candle. Okay, so 2400 is key for me, 2430 is key for me, and then 2450 is key for me. Okay, they're kind of higher time frame objectives, but I do want to see us take out this liquidity and come into the fair value gap before I see some of those higher time frame objectives. Okay, for now, in the interim, I am simply looking for this high. Okay, you can see that we have relatively equal highs up here, 2380. What's this? 2383. I think the high is there, somewhere around there. Okay, so this is the hourly chart. Okay, and I believe that we will hold this level. Okay, this is the 4-hourly rejection block that I've spoken about. I believe this will hold this level on a 4-hourly chart. This is your order block. So the hourly order block, the 15-minute order block I mentioned is within there. This is the hourly chart, hourly order block. So I believe now as we move up, this level will be respected, and we continue moving up to 2380. That's my current and only objective right now. If we get a bigger move up, then 2400 is what's in play. So if we kind of take this out in early, before New York even begins, we need to assess the market, right? So we could go up there and then we could come back down. That's possible as well to hit the ultimate current levels that I'm expecting at that 2350 mark. So for now, I'm just looking at this. Once we get that, I'll do an assessment. See, do we come back down or do we continue going up? Okay, so I hope the video was useful. I will now talk with you in a future video.